Good morning, people. Hope we're all well. Just getting myself set up here. Let's get that link. Morning, CM. Morning, Lewis. Hope we're good. Nothing to rush to the charts for just yet. We do have a consolidating Asian session where we've got a high and a low printed, rather than it just being in a single direction. It is quite a high volume session though. We've got 44 pip range there, which isn't the best sign. You kind of want a tight range with a high and a low printed. The low was set. We've came up and taken the high instead, so it's not just been a straight like sweep of the local extremity. We actually came up the opposite range and taken that out. I don't usually like that as much as if we just took the local low straight away and then reversed. So this is one to watch, but I think if this level does break, we will look to go short to the downside. If we are able to have that sweep and then change your character, I'll be looking for that. And I don't really like that idea as much as I do like the idea that this continues on. We then have EMA support and EMA support there. So that's the ideal scenario, but we cannot be blinded by the fact that we would still have this sweep and change of character within our preferred time of day. So that's something to watch out for as well. But yeah, main idea would be continuation right now, but we'll just have to see what the markets are telling us, not go off of what we want to happen, off what we think is going to happen, but rather what the charts are telling us. So yeah, nothing immediately to watch right this second. Let me just get the posts out and get some more people in here, because we've not been live for like 3 weeks now since I've been away. So good to get everyone back on. See if we can make some money live. Right then, so that's been posted out. Let's see what we've got. So it's looking like we've got some EMA support here, which is good. That's what the desired scenario would be. So we've got EMA support off here, we've got EMA support off there. What we kind of want to see now is this high get broken, come back down, EMA follows us up, and then we have some candlestick rejections here, allowing us to catch a long from one of our key fib levels, like this, and then ride that up to the highs, something like that. So that's kind of what we're hoping to see today. If we don't see that, then we don't have a long scenario. Another possibility, if this level breaks within a reasonable time, then what we actually have is the sweep of these highs, a change of character lower, and then we would actually look to ride that to the downside, targeting a 1 to 2 if it permits it. Okay, so if we can set our stops above the high and have less than a 1 to 2, so if this would be the high, it would need to be above there. So yeah, that is within reason. I don't really want that to be the trade that we take, if I'm honest, but if it sets itself up, then it is a valid trade for us to take. So that's kind of how I'm looking at it this morning. But so far so good in terms of the long scenario. We just got to wait for price to develop. Don't know if I'd prefer EU or GU this morning. EU has already taken out the highs, whereas GU hasn't. So you would kind of say that GU would be better because it's still got that draw on liquidity to take out, acting as like a magnet. But at the same time, I do prefer EU just because the spreads are lower. Morning, Carl. Hope you're well. Not been live for 3 weeks, but usually we do these every Monday, Wednesday, Friday. The Discord is almost set up. It's taken longer than we've expected because basically what we're doing is we're going to have a separate channel for each different product and service that we've got, and we basically need to set up all the automated tracking so that anyone that's got said product has the visibility on said groups, and then if anyone leaves said product, for example, we want it to just automatically remove them out of the group rather than fucking manually doing that. That is not what you want to do. So yeah, it's taken longer than we would have thought because it's not just the same. We're not just moving a Telegram group over to a Discord. We're setting up a whole new community on Discord as well, with more stuff than we even have right now, basically. So I'm hoping that'll be done this month or within the next few weeks. It's just kind of getting the flow right for the website. I don't know if you guys have checked, but we've just launched our new homepage for the website. Still got a couple finishing touches to do on there. I'll load it up for you right now, actually. Believe you'll be able to see my display. Let me check. Yeah, okay, so this is our new homepage. I kind of want to minimize these a little bit, to be honest, but it's just going to have everything that we do on here. So it's looking a lot slicker than before. Why is that not loaded? There we go. I think it's because I'm live at the same time, so it's taking up some RAM. But basically, we're going to have everything that we have here on the homepage. There's our track record since we started back in 2022. So over 2023 and 2024, we did 240%, which is pretty incredible. This year's been a bit up and down so far, but obviously we've only just hit that halfway mark. A little bit about us. Meet the team and everyone behind Minada. A little scroll on there. So we've been beefing things up on the back end. We just need to sort out a few of these things, I believe. But if you go under our services, you'll see it all laid out there. We've got the free course if you haven't gone through the free course yet. Whether you're new to trading, then that'll be very good for you to go through, or whether you're at that intermediate point in trading, it's also good to just go back over the basics and learn things from a different perspective that you've never seen before. So there's the free course that you can get yourself on. just fill out that and it'll put you through to it. The free signals group, obviously you guys, if you're in the VIP, you don't need to go on this, but yeah, that'll be set up as well. Trading tools, I don't know if you guys use what position size calculator that you use, but I am actually using this now, like not even unbiased. The one that I was using before that I told everyone to use was the FX Calculators app, but you have to wait for like a fucking 5-second advert before you can even do anything on that. Whereas like if you just save this onto your home page on your iPhone, you've got this ready, just available without having to wait that 5 seconds. So I actually use this now rather than the FX Calculators app. So I'll look at making this into an app, but you don't really need it because it's just one page. So if you go on your Safari on this and then click share and then scroll down and click add to home screen, you can just save this web page as an app. And I actually use this now to work out my lot sizes. So let's say we're on EU, we've got a 10 pip stop on a 200k account, we want to risk 2% risk, bang, click calculate, and it says there you need 40 lots. Simple as that, so super simple. I use that to work out my position sizes now, rather than using some third party app where you've got to fucking either pay for it or wait for some ads. That's completely free to use on our website. And then we've also got the economic calendar, and it's always standard lot. Yeah, so we've got a little lot table down there, but it is whatever you calculate there, that's your standard lot. So that would be 40 lots, but obviously if you're not doing 40 lots, it'll say there like 0.2, that would be 0.20. Let's say you like that, then that's the number that you enter in your lot. So that here would be a 0.05 lot size, for example, which is explained here basically. So standard lot is like a 1 lot, mini lot, micro lot. Ignore nano lots. You don't need to know anything to do with this units or anything like that. Just leave the contract size and the pips as default, because they're right by default. You just enter what pair you're trading. So if you're on GU, for example, you're on a dollar account, maybe not, maybe you're trading a personal account in pounds. Stop loss 5.6 pips on a £2,000 account. You want to risk 2% per trade, and then you would click bank, calculate, and then that's saying there 0.967. So then what I would do is I would trade 0.96 lots for that position, for example. So that's how to use the lot size calculator. Don't change the GU price. This basically comes up because contract sizes and lot sizes, they are derived from the dollar. So if your account size isn't in dollars and it's in pounds, for example, it will take the GU price into consideration when doing your lot sizes. So don't change that. But if you're on a funded account that works in dollars, for example, that won't be a thing because it's just 1-to-1. So that's a pretty handy little tool. Save that to your home screen on your phone and use that for a lot size calculator. It's completely free, and it's always right as long as you're inputting everything right. Up next, we have the economic calendar. To be honest, I still think this needs a bit of improvement. I still use Forex Factory over this, but you know, it's there if you need it just quickly to have a browse on the website. I'll have a look at if we can plug in the Forex Factory version, but yeah, you can filter this from just all news to just high risk news, and then you can see all the news throughout the day. So we've got ADP national employment affecting the dollar, Bank of Canada rate decision, all this sort of stuff. But I'll be honest, I still use Forex Factory over this. It was just a nice, easy plugin for us to do. Well, I'll have a look if we can plug in the Forex Factory thing, because then it is actually the same. But hand on heart, lot size calculator, I do genuinely use this now over the app that I had before, just because, yeah, it's there ready, available for you, pretty simple to use. It's free without any adverts, so take that away. The free course, if you go on our website, and then go on free course underneath our services. Just put your name, phone number, email in there, and then continue, and then you'll be directed over to the free course, and you'll be sent that as like a PDF to go through basically. So it's a pretty detailed course about the basics of trading. So getting started, what are candlesticks, how to analyze the charts, support, resistance, what are trends, different types of trading, stuff like that. So that's a pretty good step-by-step course. It's completely free. There's where you get it on the website. Our services free course, and then it should also be on the homepage. Maybe it's not on the homepage just yet, actually. I believe it's on the signals and analysis page that we're just finishing a few little bits off for that. But yeah, there's the new homepage. It looks pretty cool. We've got everything on there now. But yeah, back to the charts. So we have found that support from the EMA that we were looking for. So now we have 1, 2 EMA supports. Now we want a break of structure higher, retracement, push higher, and we want our EMA to act as confluence to that, and we want our fib levels to align with that as well to catch along. But for now, you just got to let price develop and show its hand. The sell side scenario is still on, but we only have about another 35 minutes for it. If we can break that low in the next 35 minutes, then we will be looking at a sell stop order. Something like this. I don't like the look of it, I'll be honest, but that really doesn't matter. Like, all the confluences are there, so you just got to take it. That's a really important thing to address when you're back testing and practicing your trading. The biggest, most underrated factor that you should back test is not just, oh, what confluences should I take? It's not just what RR should I take? How much should I risk per trade? All of that is mechanical, but you cannot trade purely mechanical because you are a human. You can't just assume that you don't have emotions. So a really important factor that you need to also add into your backtesting journal is, how do you feel about the trade? And you should write down, just thoughts and feelings about the trade in general and measure them against it. And then you can compare how you felt about the trade to the trade result. And I'll tell you now, I'll skip you years worth of trading. It doesn't fucking matter how you feel about the trade. There will be no correlation with that thoughts and feelings column in your backtest with the results. If it met all of the inputs, how you feel about it will not affect if the trade won or not. And although you might think, oh, well, what's the point in writing it down then? But it's so that you can actually understand how important that is. It doesn't matter if you're looking at it and thinking, oh, I don't like the look of this one. Oh, I think this one might lose anyway, so I'm not going to take it. That is the whole point of journaling how you feel against the result, so that you can see that if I felt like it was a good trade, it didn't matter. If I thought it was going to be a really good trade, it still went on to hit the stop loss. So ignore your thoughts and your feelings if you think this one looks good or not. If it meets all the rules, then you take the trade, and that's all that matters. So yeah, I'm saying I don't like the look of that, but if it does happen, it meets the rules and I'll take it. So I'll dig out some of my back tests for you. I think when I'm putting the course together and stuff, I'll dig out some of my back tests from like 5 years ago, and I'll show you the columns of like, oh, really confident about this trade, stop loss hit. Another one, oh, don't really like the look of this one, but it does meet the rules, so I'll take it anyway, but it might lose. Went on to make like 3%. And then you try form a correlation between your thoughts and the result, and it is completely uncorrelated. So it's really important to understand that, and it really helps your psychology within trading to understand that all you need to do is look at, are all these rules met? Okay, then I'll take it. Doesn't matter if I like it or not. If my strategy's got a 40% win rate, doesn't matter how I feel about the trade. Each valid trade setup, 4 out of 10 times is going to win and 6 out of 10 times is going to lose. But here are all the numbers to show that the amount that those 4 win versus the amount that those 6 lose give me a long-term profitable edge on the markets. And that's trading in a nutshell, basically. It's not, oh, I've done everything right, so my trade's going to win. It's not, oh, I don't really like the look of that trade, so I'm not going to take it. If you're trading based on your emotions, then you're going to lose money. Like, that's how the markets are set up. Like, they are purely built to play on your emotions. Same reason why they use green and red for the candlesticks, because they know the emotional factors that if you see huge green on your screen, it's going to affect you emotionally. If you see huge red on the screen, it's going to affect you emotionally when you're in that trade. So it's really important to really dig into that emotional, psychological side of trading, because that's kind of what's going to take you from being a beginner to a pro, is understanding the emotional factors behind trading. You know, if you take a loss, you just need to keep going. If you're on a mad winning streak, don't let it get to your head. Keep your composure and still trade the same. Trade the same after you've had 10 wins as you would if you've had 10 losses. And if you can do that, then that's what gets you to that next level of trading. In the meantime, while price is still developing here, why don't we take a look at some reversal scout trades and see how we've been getting on here. So we're on Aussie CAD, number 1 Aussie CAD. This is probably in my top 5 favourites. Earlier this week, so Monday, we had a win here. See what that was. I think these are about 0.4s. Yeah, 0.4 profit. Even if you're still holding that, it's coming out in profit. And then last week on Friday, so the end of last week, we would have also made another 0.4% as well, just like that. So within the past 7 days, I want to say, even less than that, like within the past, it's Wednesday now, so since Friday last week, we've done 0.8% on this, if you were risking 1% per trade. And to be honest, you can catch these a lot deeper than they say to trade sometimes. Like sometimes they hold a bit of drawdown, so you can actually wait a little bit, or even if you don't do that intentionally, and by the time you see it's up here, that would have been 0.9, that would have been 0.7. I've seen a few of the members in the group making like custom strategies around how to trade these, and I'm really liking the look of some of them, I must say. So for example, I don't know if I should even say them really, because I don't want to just like oh, hello, getting hacked. I don't really just want to give away the custom strategies that people have been showing me. What I will say is that these trades are fixed on the screen, right? So if they are programmed on the 1 hour, but if you want to hop in on the 5 minute, that trade will still plot the same. So what I'm seeing a lot of people doing, which is really interesting, is they're using this as like a top-down bias, and then they're zooming in on the lower time frames and trading in that direction. So like I said, I've seen some really good strategies that the lads in the group have been making from this, but I kind of don't want to give away their intellectual property of that so far. So I respect their privacy, so to speak, or their hard work, and I'll let them be the one to unveil it. But yeah, that's the basic gist of it, is that I'm seeing a lot of people now, like let's say you had this Aussie CAD buy signal here, you wouldn't actually buy it there on the hour, or you would maybe separately, but what they're doing is, let's say they're waiting for, let's pop our EMA on. If you didn't know, by the way, you can just copy and paste indicators onto other charts and it will keep the same settings that it was. So let's say, for example, you didn't take this until it actually changed character on the lower time frame in our direction, and then you also had the EMA as a bias, and you can chop and change this on different time frames. then that's also been a pretty successful way to trade these. But again, even if you don't want to do that and you just want something that is completely copy and paste, then you can see that it is profitable based on the past 3 years if you just blindly copied and pasted every single trade as it was shown to you here. So it's a really, really powerful tool that we've created here. Most of these are scalping models, so they're looking at banking low RR trades at high profitability times, but doing so with a huge win rate. So you can see here 1, 2, 3, 4, 5. 5 out of the 5 last trades we've won, making 0.4% each time. So we've made 2% over the past 5 trades in the past like 2 weeks. That's using 1% risk per trade as well. So these are really good to trade on funded accounts with. Sort of like a more accessible version of the funded autopilot, because it's you manually placing the trade. So these are pretty good for that. And they're available on like 14 different pairs. New Zealand Swiss is probably my favourite. So let's check in on that one, see how that's getting on. This one does some absolute crazy volume. So each one of these is like 0.25% if you catch it exact from entry, stop loss, TP. And it gets some crazy winning streaks as well. So we've had 1, 2, 3, 4, 5, 6, 7. And you can catch these in drawdown as well. So a lot of people have been saying like, yeah, I thought it was shit at first because it's only making 0.25. But to be honest, I've been waiting and just catching it for like a 0.5 and only catching the ones that go in drawdown. And even still, like some of them, if you catch them late enough, you can do like 1% on these. So you are flexible to trade it how you want, make your own trading plan around them. Like we've mentioned about hopping on lower time frame, using these as like a higher time frame bias rather than just taking them. But yeah, we see this thing hasn't lost in a while. If we're looking here, and it's trading pretty much every day. Okay, so the last loss was the 12th of May, and since the 12th of May we've just been racking up wins on a scalping type model. Honestly, when you first get into trading, scalping doesn't seem good because you're thinking like, oh, but when I win I'm only making like 0.25%, but when I lose I'm losing 1%. But it's like there's more to that in trading. Like you also have to look at your win rate and the RR combined to be able to see the overall picture. And it's kind of hard to believe that scalping works, but it's really good. Like since I've got in deep into trading, like I'm 8 years down the line now. I started off with swing trading, and then I started day trading, then I got into intraday trading, and now especially for algos, I'm looking at scalping. So I've kind of really honed down on the time frames in my years, but I guess it's only natural progression. But honestly, when it comes to algos, scalping is fucking sick. It's not that good for manual trading because it is very time sensitive, but I guess that's where computers come in handy when it's like automated execution and stuff. But yeah, I'd say this one is my favourite pair, New Zealand or Swiss. Is the plug and play monthly subscription? We've got a monthly subscription and then we've got a yearly subscription as well. The yearly cost is like £397, and we have 20% off if you purchase it with a funded passing as well. And we often run 20% discounts as well. So we've just done 20% off at the end of last month, if you managed to catch that. And that brings the overall cost of it down to like 87 pence per day, which is something like $1 a day or something like that for yearly membership. So it's pretty cool. And as long as you're using this and actually utilizing it properly on funded accounts, then it's pretty much a no-brainer. It just pays for itself, so to speak. Right, so we've got this, going back to the London session now. We've got this support that we said we wanted. where this EMA has acted as support, boosted price back up. It's also retested it a couple times here, which is nice to see. What this does is it now gives us multiple instances of support on EU, and I said the next thing that we need to see is that level break, which it's trying to do right now. If this prints as a higher high, so I want to see like a solid close above here. If that just has like a little half-arsed pathetic like match of the high and come back down, I don't class that as a higher high. That would be a double top, and a double top is not the instance we want to see, where we've got clear higher highs and higher lows. That's the structure that we're after. But if this doesn't do that and it comes back down to like there, okay, where that's like an equal high, even if it's like a tiny bit higher, it's still not the momentum that we want, then it's not as likely that this next low is going to be higher and then that surpasses. It kind of breeds the scenario that you might start looking to go lower because this high couldn't break that high. So that's what we need to consider when this high is breaking that level there. 1% risk but 0.25% reward. Yes, for a system like this, so each of these wins, if you're risking 1% per trade, when they take profit, you're making 0.25% profit. That is kind of just how scalping works. The reason it works and turns out profitable in the end is because you purely just win way more than you lose. So like if you take 86, if out of every 100 trades, you only lose 14 of them, okay, you're losing 14% from the 14 that lose. But of the 86 that win, and they're making 0.25%, they're making like 22% on the upside. So when you're looking at if a trading system's profitable, you don't just look at how much the RR is, you also have to consider how often they win and how often they lose. And then it becomes a sum of those two factors. So you can clearly see from this equity chart, equity curve from the past 3 years, that it has that edge. But also you can just do the maths based on the RR and the win rate as well. So you see a lot of people luring beginner traders in by saying, oh, I've got a 1 to 10 R trade. But that guy might be losing like 19 out of fucking 20 trades in the background, but he's just shown that one trade on social media that won. And everyone kind of wants to hit these big RR trades, but the way that trading works, if you're making big RRs, then you kind of have a lower win rate. And if you've got a lower win rate, then you've got big RRs. If you've got low RRs, you've got a high win rate. If it works, that is. So yeah, that's why beginners don't really like scalping, because it's not like hitting any home run trades. But what it is doing is it's collecting a very large amount of singles, using the baseball analogy there. It's about collecting a large amount of singles in the market with high precision, rather than like trying to hit any home run trades. And these are really good strategies to trade on prop firms, because your short-term success rate is so much higher because of your high win rate. So out of every 100 trades using this system, 86 of them have won based on the past 3 years, basically. So it's really good for trading on prop firms, because your chance of short-term success, i.e. getting that challenge phase passed, securing your payouts, getting your money back from the challenge cost, and then getting yourself in pure profit, the chance of that is much higher when you've got a higher win rate, compared to if you're using like a strategy that's got a 20% win rate, but it hits 1 to 10s when it does win. You're much more likely to fail prop firms using that system than you are this system. So that's kind of why I like them, the scalping. So Euro, okay, we broke this higher. So we've got a break structure there. That's nice. So this is broke higher. The next thing that we need to develop now is basically the EMA will naturally develop for us higher. What we're looking for is where this high will end, so that we can catch a retracement back to one of our key fib levels. like that. So everything's going our way how we wanted it to so far. Now it's just sort of waiting for price to develop, basically. But so far, so good. I've been yapping on for a little bit, so maybe I should just go on mute unless there's anything else to talk about while I get some stuff cracked on within the background. But let me know any questions, fire them away, anything you want to go through at all, and we'll take a look. But I'll leave the chart on screen here, and basically, yeah, what we want to see is for this to post a high, retrace back down, we catch it as a buy here, and then go long to the upside. So that's kind of what we're waiting on at the moment. Okay, so it looks like we're forming a high here based on the wicky nature of the candlesticks at the top, but better not to speak too soon and just let price play out. I'd probably be looking off of this low. What I usually do is I try and line it up as best I can with the fib levels while also staying true to the nature of actually taking it from a low. So I wouldn't want to take it from something like that because that is just not the low of price. Realistically, this is the pure swing low, but if there is clear-cut lows throughout it, like this one, I'm also happy to use that as well. It just also kind of needs to line up with where the price is going to react to that level as well. Another handy thing that I usually do is I'll look at the retracements made by the previous waves as well. So if we take this low to this high, you can see that price retraced only to the 61.8 level actually for that wave. So price so far today hasn't really been pulling back too much. If we look at this low to this high, that's probably going to be like the 38.2, yeah, 38.2. And then it just kind of gets even worse, like this one, again, only pulled back to the 38.2. So maybe with this trade, we won't manage to get that pullback all the way back to the 71 like we used to. If that's the case, what we can actually do is take it from the 61.8 and use that 78.6 level as a stop loss instead of the previous low. I would probably add a good pip below that just to be sure. But yeah, if we're looking at an impulsive wave structure where instead of it retracing quite deep like it usually does, instead it's more impulsive and we're only pulling back a little bit like this, then we can kind of use that to expect the same scenario on the next wave as well. So we just got to wait and see what happens. Okay, so it looks like this was the high, like we predicted. Not that that's a skill or anything, but you can kind of tell when the price is getting wick here, this is what you would refer to as buyers turning hands into sellers. So everyone that went long here has to take their profits at some point, and when they take their profits on a long, they close their order, which actually pumps sell orders back into the market, because every buyer becomes a seller and every seller becomes a buyer when your position closes. So this is just simply all these people that got in here closing out their profits and going short, as well as people that would go short just enter the market short at this level as well. So that's order flow. What we're looking at now is we want to basically see candlestick rejections as price approaches our zone. So similar to like I mentioned there, where when you see these sort of candlesticks, it signals that a reversal might be happening. That is now what we want to see again here on the way down. So we want to look out for things like hammer candles, doji candles, pin bar candles, tweezer bottoms, things that signal that short sellers are now turning into long orders. That's what we want to see in the run up towards our trade. And then when that happens, that's when, okay, we'll confirm the order. If that doesn't happen and price purely just dumps down to this level and we don't have any candlestick rejections whatsoever, I won't go long. So it's a necessary part of my strategy that I need to see some form of candlestick rejection before we enter long. I'm still not 100% certain if I'll go for the 61.8 level. So let's just do some further checks to see if that's really what we want to do. If I am checking the fib from this low to this high, that's the 50. And if I measure from this low like I'm gonna, yeah, that's about a 50% retracement. It would fill in that fair value gap there, which is nice. I do prefer going off the 71, but I think this is some very impulsive higher high, higher low structure. So I think in this scenario, we can probably go for that 61.8 level for an entry. Like that. I'll put my stops a pip below this 78.6 and we'll target that previous high. Like that. So what I want to see as we approach our zone is some rejection candlesticks from this level. And now we wait. So I'll set an alert there. I'll price up what lot sizes I need to take based on a 4.1 pip stop, just in anticipation, so that I've got the position there ready if we are looking to go long. But I won't place it just yet. Like I mentioned, I want to see candlestick rejections first. Let me know if you have any questions about the strategy. But yeah, right now we're just waiting for further development. I've not got any limits set on this just yet. I want to see those candlestick rejections coming from the 50% fib or the 61% fib, showing me that short orders are converting into long orders, and then we'll set our limits to get in when that 61.8 level is hit. But as of right now, no limits set just yet. Waiting for that confirmation before we get in. So price is in our zone. Again, we're just waiting for them confirmation candles, so I'm not looking to set a limit just yet. This is where we're watching price action to see what sort of candlesticks are going to print, telling us that long orders are forming and short orders are taking their profits, basically. So we want to see a nice gradual turning point forming where we catch the bottom in theory. It doesn't have to be the bottom. Even if it comes through and goes all the way down here and then goes back up, we're still fine. We're just basically buying based on the 61.8 level and this EMA, as well as the candlestick rejections, getting us in for a nice 2.73 trade. If price just completely goes down without showing us any rejection, then we won't get in the market. And likewise, if we just have some pretty weak, pathetic rejection, we also won't get in that either. It needs to be a clear rejection candlestick. Okay, so price is approaching our level, but we haven't got the rejections that we need just yet, so we're not looking to go long here. I know I've got the position set there, but we've not got enough confirmation before entry just yet, so we're still just waiting on that confirmation candlesticks before we go long. Something like this, like a hammer candle, would be perfect, but again, don't go off the open candlestick. You need to wait for the candles to close before we can redeem it as a valid confirmation candle. Even if price keeps going lower and then we have the confirmation candles, we can actually drop our entry and get a better entry. So just because we haven't got the confirmation candles just yet isn't so bad of a thing, because it might mean that we get a deeper entry into this trade. But we've just got to wait and see for now. Carl says, so we enter blah 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 into MT5's our buy limit. You should check the spreads on your account first. So check whatever the spread is on EU, depending on what MT5 account you're trading on, and then add that amount of ticks to your entry. So that's covered in the free course that I've mentioned earlier. And that's a very crucial point to trade in. The reason I trade EU is because it is the lowest spread pair. So depending on your broker, it'll usually be between 0 to 5 ticks. So basically, instead of placing That, if it was 5 ticks, you'd put 8 instead of 3 because you're adding 5 on. Still not a strong rejection so far, so I'm not placing that as a trade just yet. Let's keep on watching the candles and see if we can get that necessary rejection. So price has hit the EMA, it's hit the 61.8, and so far we've rebounded instantly. Price has instantly found that support to push higher. It's a little bit too early for us to enter just yet though, it's only been 4 minutes. So let's wait and see if we get that confirmation before we enter. If we do, and this closes like that, that'll be a tweezer bottom candlestick formation, and then yeah, we'll set the limit again for something like that. So give it another minute and see how that closes. Because yeah, we don't go off the open candle. You want to wait for that candle to close, telling us that it's valid. Right now it is. If it closes like this, then yeah, we're looking to set limits. We've got a nice doji candlestick forming here. And what's good about this is you can see it's wicking off the EMA. Right, that is valid. That is a doji candle. So we're looking to set our limits here now. Let me just go ahead and place that trade. Buy limit. 3923 plus your spreads. And then your stop loss. 3882. That's that one set. Bosh. It'll be a market execute trade now. 388. Bosh. Next account. So we're in this now. .3882. Cool. Right, so I'm in those trades. Let's send it out to the group. Entering off there at the moment. That's a 3R market execute. Send this one out. So this is a Euro US dollar long idea. Entry, stop loss, TP, RR. Get our levels. So take profit, stop loss, entry, entry, stop loss, take profit, send that out, just like that. And then since it's the first, did we send it? Yeah, it's the first, put this one out in the free group as well. 1 trade a week. Like so. Good reaction so far. Let me put my take profits on now. Whenever I enter these, because I'm trading it across multiple accounts, I usually just put the entry and the stop loss in, and then I'll put the take profit in afterwards, just so it's quicker when you're executing. That's a little tip for you. So that's one. That's 2. And that's free. Yeah, that looks so far so good to me. Let me know who caught that so far. It's a valid trade. We've got multiple EMA supports. We've got the bias from the Asian session since we closed out higher with a breaker structure. We've got the fib level being respected at 61.8. We do also have, not that I use fair value gaps as a confluence, but we do have that fair value gap being filled as a confluence if you want it. Probably, yeah, a 5-minute order block there as well. That's, well, I guess no, we're above that. Never mind. I don't use fair value gaps or order blocks. I feel like it's kind of like cloud gazing, where like if you look for them, they're there, but I don't use them as confluence. But we have the candlestick rejections as we approached our entry with this doji candle here, and then now that we're live, we've got this bullish engulfing taking out those past 4 candles as well. But yeah, this is valid. This strategy has about a 40% win rate, and we normally target at least 2.5 or 3R. This one's a 3R trade, so 40% chance this wins, 60% chance it loses. But if it wins, we make 3R, and if it loses, we only lose 1R. So that's the numbers there for you. So let's see what happens. It's set now. Now just set and forget. Can you connect your broker to TradingView? I personally don't like doing that, to be honest, because if you misclick something on TradingView, it can literally trade live capital. So I prefer not to do that. I prefer to keep it separate, and therefore I can chart safely on TradingView. No matter what I do on my TradingView chart, it's not going to suddenly like buy or sell any orders. So that's just my preference. Struggling to enter on MT5. We do have an MT5 tutorial. I'll send that over for you now, just to show you how to use MT5. But it's one of those things. It's like if it you kind of need to learn it before you know it, but it's not hard to learn. And then once you learn it, it's a skill that you've got. So super straightforward. We're testing these lower fib levels now. See what happens with it. But I'm happy with this trade, no matter the outcome. It's not a nice candle to see after the entry though, but all the confluences are there on the 2-minute. And like I said, you have to just accept the win rate of a trade before you place it. So yeah, I'll just leave it to the trading gods. We'll set our alerts. Good trading practice is once you're in the trade, just set your alerts and then come back to it when a level of interest has been hit. You shouldn't really sit here and watch the chart play out when you're live. It just wrecks with your head. But obviously, for the purposes of education and being live, I'm going to leave it on screen for you to see. But if you're learning how to trade and you're still, in that psychological stage, I probably wouldn't just sit and watch the chart. Like, it's probably the worst thing that you can do. So set your trade, set your limits, and then minimize the screen and come back to it when the alert goes off. Whenever you set a trade, you have to accept the outcome that it could win or it could lose. It's important to understand your win rate. so that you can understand how often they should win and how often they should lose. With this particular strategy, it's got about a 40% win rate, so it is more likely to lose than it is to win, but the difference is that it wins way more than it loses when it loses, if you can kind of get your head around that. And that is the essential thing to understand with this strategy. So we do have scalping strategies that have super high win rates, which if you're more comfortable with that, we have them. But obviously the downside of them is they don't make as much when they win compared to how much they lose when they lose. But that is just the nature of trading, okay? Any trading edge is a balance between win rate and RR, and you can either make low RRs with a high win rate, or you can make high RRs with a lower win rate. So with everything that we've got available, take your pick. we've pretty much got a mixed basket of it all. So you can never be like, oh, I don't like that. Okay, use the other thing then. And if you don't like that, use the other thing then. And we've also got strategies available as well that are sort of like a mix in between. I know our Aussie dollar is a good example of that, where it's like a bit more of a moderate RR. So this is like I think it's like a 1 to 6. Yeah, about a 1 to 6 with about a 50% win rate. So if you're saying, I don't want a high win rate and a low RR, and I don't want a low RR with a high win rate, I want somewhere in the middle, then we've also got that available as well. So it's about, like, perfect example here, past 4 trades. Loss, win, loss, win. 50% win rate, but when it wins, it makes 1.6, and when it loses 1. So those 2 winners have made 3.2, and those 2 losers have lost 2. Overall sum of that is you're up 1.2% after 2 wins and 2 losses. So we pretty much got it all when it comes to that sort of stuff. This particular strategy that I manually trade, which is my bread and butter, this one is a high RR with a lower win rate, and that is a lot more suitable when you're manually trading, because let's say you didn't catch this at the entry and you actually caught it like down here, you're catching a 5R trade. Okay, so that's one of the benefits of trading a strategy like this, versus if you're using a more scalping system, you kind of need to be on the ball and get the exact entry. Otherwise your edge is going to be really distorted. That's kind of why algos are better for trading the scalping system. But nevertheless, this trade is valid. We're making higher highs and high lows above the Asian high. We've got our EMA, which was used as support. We've got nice high high, high low structure. We had the necessary candlestick rejections before we got in. We've got support coming from the fib levels. So yeah, it's just about letting this one run now. 4 out of 10 chance that it wins, 6 out of 10 chance that it loses. You just kind of got to let the law of averages do their thing now. Okay, so stop loss hit, -1%. Not the ideal outcome, but you have to accept it as part of the win rate when you're trading. We'll keep on looking for the day because it's still early. We've still got time in the range, but yeah, unfortunately, this one is a stop loss. Get used to that if you're trading. Don't fall in love with the idea that, oh, I've done everything right and therefore my trade is going to win. That is not how trading works. It's a game of probability. I kind of compare it to running an insurance company or running a casino. You have to just accept that each outcome is based on a probability. You've got the numbers and the law of averages to show yourself that over time you're making profit and it's a profitable outcome. But each case by case has a chance that it is successful or has a chance that it's not successful. It's the sum of those over the long run, which is what makes your profit. So let's say Allianz, for example, what they're doing is they're basically betting to each person that that outcome is not going to happen and putting them in a scenario where if it does happen, they lose this much, but if it doesn't happen, they make this much. It's not to say that each event doesn't happen. It's to say that the sum of that probability with their winning over time is a profitable business. Okay, so that's kind of how to dissect trading and look at trading. It's purely just a case of win rate versus RR. So unfortunately, this one was -1%, but on another day, it would have been +3%. Okay, so let's share this one out, -1% for the track record. And that's kind of why you only risk 1% per trade as well, so that if you have a losing streak and a run of losses, it's still not a catastrophic outcome. So you're only betting a small amount of your pot on any given trade. You don't want to bet the house on anything. It's more about a large sample size of small, consistent bets adding up over time to become profitable. Okay, so unfortunately, this one was a stop loss hit. Let's share that one to the group. And then we'll keep looking, see if there's anything else to set up for the day. So we'll take that off. EMA has now been broken. The EMA is still strong on GU. But with this session high being swept, you kind of don't want to buy back into that. You kind of want to wait for that to break first. Or if we're going long, if we're going short, you would want that to break first as well. So GU is not really in a tradable zone right now. And same with EU, you wouldn't want to short that until that level is broken. Like that. Okay. Now, if price keeps trading beneath that EMA, we would want to see that level break first, number one, so that we actually have the bearish trend. But then it opens up the sell side scenario now. Okay, now that this EMA has been broken, if this trades lower, we might be looking to short EU for the rest of the London session. So we just have to wait and see, basically. It's not about knowing what's going to happen, it's about reacting to what does happen in a way that makes money. So we'll keep our eyes on GU, see what happens there, because this is probably going to develop first. So yeah, we'll just keep our eyes on that. There you go, and how are you doing? Set up on the 5 minute. Are you? Which one are you talking about? This one? On EU. We just took a loss on the 2 minute on EU. The reason I'm not looking for this on GU right now is because we have just swept the Asian high. So what I need to see in order to keep going long is for that level to break again, close above, and then trade higher than that. But I wouldn't buy this directly back into that level, just because where we've had this liquidity sweep, it's much more likely that this is a reversal point, and then what you would have there is your classic head and shoulders reversal pattern. So that's important to analyze as like a pre-mortem, that if you have just swept that key liquidity level, we want to see that invalidate first before we keep going long. So yeah, that's why I've got these lines drawn here, because I want to see a break of structure either side of this before I keep looking for trades first. What I'm playing around with on EU is the fact that if this level breaks lower, okay, because we were originally looking long and it didn't happen. So now if this level breaks and we have this change of character, what we potentially now have is the start of this bearish trend that trades lower. And then what we have is this EMA resistance, where we have multiple instances of rejection there. So that's what I'm looking at here on EU now, is the sell side scenario. Now that this liquidity has been taken, if we have a change of character from this level, a strong one that is, not this like little weak gimpy wick, that's not a change of character, okay, that's a double bottom. So like I said at the start of the stream, we want to see a strong clear low being created to keep going lower, okay. I don't want to just like have this little pathetic wick to keep going, because that's not a new low, that's just a double bottom, okay. So this is the idea that we're looking at on EU at the moment. So this probably is going to develop quicker than this, so let's see how it gets on, eh? So yeah, like I said, it has to be a strong low that is formed. This is not a strong low. Like in the grand scheme of things, all this creates is a double bottom for me, and a double bottom isn't a new low. It's just not. It's just a double bottom. So unless this pushes lower, I'm not looking to go short just off of that reaction. If it does, that's great, because now we do have the low and we can look for the next one. Okay, so even if this plays out, this would be the low that I would short from, or the high that I would short from, should I say. So yeah, let's just wait and see what happens. Looking at GU, there's no further development there. So yeah, let's just keep our eyes on this and see what plays out. So we haven't really had any development from this move up, which is good. We want this to be a strong close beneath so that we have the outlook of this being a lower low, lower high structure. And then we can start looking for these shorts to the downside. Okay, so that's a good thing. Pound hasn't developed between this range either, so nothing, no further action there. I guess all that we're waiting on at the moment is for this to print some solid lower low, lower high structure so that we can look for shorts. So I'm still going to be trading for like the next hour, so plenty of time on this 2-minute time frame. We've got 30 more candles to print, and from there we'll see if we can make any money from them. Okay, so now we actually have a 5-minute candle close beneath that previous low. So to me that is good enough to be a change of character now, rather than this just being a double bottom. So we can entertain the idea of this being our resistance and looking to trade lower lows and lower highs. The only thing I don't like about that is this this is now the double bottom, so it would mean that we want to take the fib from here rather than that level, essentially, because this isn't the low, this is, unless this level breaks right now. So yeah, we'll keep watching to see how price develops now that we have that, and this could be looking like an EU short to finish off London session. So we'll wait and see. That's all you can do. Okay, so what we do have here is we now have this lower low, lower high structure with this change of character taking place. So we've got the EMA, which has been used as resistance multiple times there and there. So we are looking for price to continue with lower low, lower high structure. With this, we can look for a pretty deep retracement to the 78.6, looking at how all the other retracements have played out. So this could be a pretty nice trade lining up if we have all the other relevant confluences available to us. So let's mark out our levels like so, and this could be another 3.17R setup. Price is making lower lows and lower highs. We're trading beneath the EMA again now. We've swiped that liquidity, changed character, and now we're looking bearish. The only thing in question for me is whether we class this as having multiple EMA resistances, because this to me acts as resistance where it came up and rejected it, and it was a separate wave to this one. Let's look for some candlestick rejection as it approaches the zone there. Set an alert and we'll come back to it. Okay, so we can see the strength of this bearish trend right now. It didn't pull back to the level that we would have taken a short at. It actually kept pushing lower. So we can take off our alerts. It's not like we was expecting price to come all the way back to that level. It's just that if it did, we would have had a very good trade entry for that. So let's just keep watching it for the next 30 minutes and see if we can get a pullback deep enough for us to catch a short from. Okay guys, so it looks like price is just going to melt off without giving us an opportunity to use this EMA as resistance once again. So just the one trade for us today. We were looking for this trend to continue and push higher. We had all the necessary confluences. Today was just a losing day, and they happen. It's just part of the win rate of trading. So whenever you enter a trade, you have to accept that it's got a good chance that it wins, it's got a chance that it loses. You just got to make sure that the sum of those outcomes is positive for the amount you win when you win minus the amount you lose when you lose, and you've got an edge on the markets. We've been doing this for years, guys, so we've got all the data to prove what we do and the past track records. So thanks for sticking around if you made it this long. Hope it's been educational. Yeah, you can see the point that we made earlier, not too long GU higher because of this sweep, treating that as a bit of a post-mortem analysis. Was correct. If we did go long, it would have hit the stop loss there. So we made the right call in staying out of that trade. Unfortunately, it was just minus 1% today, but those days happen. So keep your chin up, and I'll see you guys next time.